Hi, I'm Rick Edelman. Thanks for joining us for this special edition of Readact TV. And I'm really excited to be joined by my good friend, Ryan Radloff, who's the CEO of Choice by Kingdom Trust. Ryan, thanks for joining me on the program today.
Likewise, Rick. Thanks for having me. Look forward to it.
So Kingdom Trust and Choice is like this incredibly well-kept secret, a $20 billion organization that a lot of folks have never heard about in the advisory community. So let's start right there. Talk about what is Choice and why did you start it?
Choice is products that we offer by Kingdom Trust, which is the trust company. But Choice is the app that our consumers and advisors use to invest in alternative assets. The idea of Choice is that you have access to both alternative assets and legacy assets like stocks and ETFs from one account. So Choice gives, hence the name, gives advisors the choice of accessing things like Bitcoin, gold, real estate, as well as ETFs from one custody account. Obviously, what we are most famous for in terms of creating Choice is the Bitcoin and digital asset, which is our core focus for helping advisors get access to that in one application and one platform.
And it's pretty well known. I'm a big fan of what Choice does. I'm not only a customer having an account with Choice, but I am also an investor of equity in the company because I'm a big fan, Ryan, of you and the work you're doing and your whole team. And so I wanted to make sure everybody realizes that. So one of the biggest issues that everybody in the advisory community is focusing on these days is not whether to engage in the conversation of digital assets in terms of portfolio management. The question is now how. How do I integrate this into my practice management? How do I make it a part of my routine? Because advisors are basically doing two things with all of their clients. Advisors are building diversified portfolios. And within those diversified portfolios, they are routinely buying assets, selling assets, and most importantly, rebalancing those assets within the portfolio. Explain how an advisor can incorporate digital assets and do their job buying, selling, and rebalancing with all of this.
Right. So the problem the advisors face is that the probably the large custodians that you're using, whether it's Schwab or TD or one of those other places, they don't allow you to access the digital asset market where you can have the same depth and breadth of access back and forth between stocks and crypto. And the reason why, it's obviously a very new asset. They have a lot to lose as a big group of being too forward thinking and some newer assets. So what we've done is think of Choice as like the alternative asset or crypto bolt-on to your existing custodial infrastructure, where we make it as easy to handle Bitcoin as an ETF or stock, both for you as well as your back office. So you're bolting on an additional custodian, qualified custodian that handles all of this part for you so that you can integrate it in with Orion and with your back office like it's a stock or ETF, just as easy as on the other side. So what we're seeing is that the advisors are not necessarily leaving their current custodian, but using us as a bolt-on where they can seamlessly add those different types of alternatives, most popular being Bitcoin, to their overall strategies for their clients. And what we're able to do and how we make that happen is we are a qualified custodian with 20 billion in assets that have been working with RIAs for the last 10 years on all sorts of things like real estate and gold and things like that. So we apply that regulatory wrapper with the infrastructure you need, like bulk client onboarding, bulk trading for rebalancing and things like that, that just what you get with the ETF side. And let's not forget about the back office, because a lot of that matters. The billing, the things like that, we scrape client fees. We're able to add in your advisory fee just as seamlessly as you're getting with the ETFs, mutual funds, and everything else.
Well, you know, I was just going to ask about that. Okay, if you've got the practice management piece down of buying, selling, rebalancing, the next big issue for advisors, of course, is the AUM fee. Advisors need to be able to collect that fee and maintain compensation. So elaborate on how that works.
Well, there's a whole, it's when you think about it, what's interesting here is that we calculate fees, custodial fees for these assets. We bolt on the advisory fee to that as well. So your the daily balances of the NAVs that you're managing, we take out the fees just as the advisor would normally with ETFs. And the tech we built in the back end of our trust accounting systems enables us to do that. So we're able to pull client fees and advisory fees from the assets under management of the crypto assets, just like their ETFs or stocks. We pull those into an account and a balance for the advisors and send it to their bank account for their back office to reconcile and to have. So it's pretty seamless in that regard.
So that assumes that the fee is an AUM fee. Is there any restriction or issue with different AUM fees? I mean, different advisors have different fee schedules.
Right. Well, we've seen a couple. I mean, we've seen a couple. So most advisors, when they come to us, aren't looking to reinvent their fee schedule. They don't want to go through the clients and say, hey, we're going to change the fees. All they're doing is they're adding an asset to like Bitcoin to their existing portfolio. So they're going to replicate their fee schedules on the choice side, and we will run those fees out of the accounts exactly the same way. Now, what we'll see is a lot of them will have tier basis. So the higher and larger the portfolios grow, we'll see advisors that kind of scale back the basis points.
Right.
Others just want a flat fee. This is it, vanilla, quarterly or monthly. We run that right out of the accounts, just like you see for the legacy stocks and ETFs. So really, it's both. But I think most of the time, what we're seeing, the advisors are not looking to recreate anything just because it's crypto or Bitcoin. Let's keep it simple for the clients. We have a fee schedule. We charge this under management or advisory, and we replicate that into incorporating that into the world of alternatives in crypto, and it just bring that into the same strategy that we're withholding everywhere else.
So whatever the client's fee schedule is the client's fee schedule. There's no difference.
Yeah, all we're doing is we're adding Bitcoin now to your overall strategy for these clients, and you charge X percent. It's for whether it's Bitcoin or ETF or things like that. And I think that's what makes it easy and seamless to just be that bolt-on.
All right. So there are still some concerns from advisors about this whole conversation because let's face it, it's still new. Even though Bitcoin has reached $1 trillion in value faster than any other security or asset in history, it took Microsoft 44 years to become worth $1 trillion. Bitcoin did it in 12 years.
Yep.
Still, there's concern about the safety and security because this is, after all, a digital asset. Are the assets secure? How does Choice, by virtue of being a qualified custodian, how do you ensure that the assets are safe and secure? And what happens if your account, your platform is hacked?
Right. So as you're mentioning, Rick, it's a new world where you have, in this situation, you're outside the world of FDIC and things like that, where the bad guys want to come grab these assets. So at the end of the day, what you're talking about is trust. And just because you're regulated doesn't necessarily mean you've got the correct infrastructure to keep the bad guys out, right? It's like two different conversations. You can have a sterling or excellent track record of being a regulated custodian or bank or whatever, but do you have the techie millennial guys that are kind of the counter hackers and the defense back? It's a whole new world. So at the end of the day, what you look at is trust and institutional infrastructure and insurance that backs that. So what we do at Choice, think of us, again, we are the app that interfaces with you and the clients that enables you to seamlessly go back and forth between ETFs and crypto. Behind Choice, we leverage the best names in security for Bitcoin and for digital assets. And Fidelity Digital Assets is who we have used and selected and partnered with to actually physically store the Bitcoin in cold storage. So the fortress of Fidelity Digital, which is a name that not only all of the advisors will know, but also all of your clients will know, is the group that is backing the security of our product. Now, why that matters is because if you're an advisor, even as a CEO of Choice by Kingdom, there's things that I'm learning every day about Bitcoin in our market. And if you're an advisor, the world of security around these assets is always evolving as well. And what our clients are telling us is that when you can answer the word security and back that by the word Fidelity Digital, it really carries a lot of weight. And you look behind the rails of what they've done, and it's by far the most institutional infrastructure on the market. So that's who we use to, it's called sub-custody, but really keep their rails, the Bitcoin, safe behind their firewall. It's very similar to the world of like gold and sub-custody as well. It's a similar type of concept where you take someone's institutional rails that they've built, and then we've built something specific for the advisors that handles their trading handles the rebalancing and also the client fee scraping that's needed to be able to conduct your business.
So, what would you say to advisors, Ryan, who are still struggling with why should I do this? What's the benefit to me, my practice, my client, of allocating a portion of the portfolio to digital assets? Why should I get off zero? Meaning, I have a zero allocation right now. Why should I get off zero?
Well, I think, so I have to put two hats on that. Obviously, if you think about my role and my official role as the CEO of a custodian, we are directed by our clients, so I can't put necessarily here's why you should involve crypto assets. But what I can explain is here's why our clients are doing it. So if you look at our advisors, they're doing it for basically two reasons. First of all, you have advisors that are client led, where you've got a number of clients that are asking about it over and over, believe in it. There's now 8 million Americans that have already purchased Bitcoin and have retirement accounts, for example, but don't have Bitcoin in their retirement accounts. There's over 50 million Americans that have already purchased crypto, if you look at Coinbase's new user information. So there is a trend that is going that direction, whether you believe in it or not. It is a factor, and there are advisors that are using this as a mechanism of gaining new clients, of being on the cutting edge, of being forward thinking, not just talking about time interval ETFs and mutual funds. It's actually a part of that discussion. So they're using it as a differentiator to gain clients and also have an answer for clients that are asking them about it. Now, there is a smaller subset, Rick, of advisors that are listening to institutions like Guggenheim and others that have seen the writing on the wall from a macro standpoint and have actually looked at it as a really interesting inflation hedge for the rest of their portfolio. And in that case, they're not necessarily doing it to win new clients or to make the 10 to 15 clients have an answer for them on the crypto world. They're doing it because they actually structurally believe in the investment thesis. And in that case, what they're doing is they're buying not 20%, but somewhere between 50 basis points to 3% of a portfolio, like you said, off that zero number. And they're adding that kind of inflation hedge, et cetera, of what the thesis has become in the institutional world for portfolio management. So it's really those three things. You've got a big group that are using it to go after the 50 million Americans that are already owning, trading, buying crypto, and having an answer for those groups when they ask you, what's your Bitcoin strategy? The second group is you see some that are starting with just the subset of clients that are already bringing it up and buying it. They want to retain assets under advisory. That's a big one. And then, of course, that third, which is the smallest group, albeit growing, especially thanks to groups like Readac and others, where they are structurally endorsing the thesis of it. They're following what Paul Tudor Jones has done, what Guggenheim have done, what the Druckenmiller and all these other big macro investors have done, and they're adding it to a part of the larger kind of structural thesis of their firm's investment management.
In other words, if you believe in diversification, then you should diversify as much as you can. And you probably already have in your diversified portfolio asset classes you don't particularly like, but you put them in there because it's part of diversification.
That's right. And there's a subset of that if you get in the portfolio theory where you can look at the risk adjusted returns of Bitcoin and digital assets and the benefit they have to the portfolio. But again, right. We can have a coffee over that and talk about for a while. But what I'm seeing from our clients right now in the market are those three things, basically.
Got it. You said something in passing that is worth really elaborating on. A final question for you, Ryan. You made a distinction between Americans who are already investing in Bitcoin digital assets versus Americans who are doing this in their IRA accounts.
That's right.
Most advisors, I think, would assume that the only way you can buy Bitcoin is in a taxable account. But you can't do this with an IRA. That's
bingo. And I think that is the whole reason that I have jumped into this industry. Because if you look at the United States retirement market, if you look at the amount that advisors control in that market, as well as just the individual IRAs, there's over $20 trillion in that market. It is possibly the largest and greatest untapped market for digital assets, both for advisors unlocking that there in what they control, as well as the individual retirement accounts. So what we've done, it's really interesting, is Choice enables you to buy digital assets in your tax qualified account, which is particularly interesting, especially if you have individuals that are active in trading. Because we all know the macro environment right now, if you ask most economists and policymakers, looks like we're entering into a world where taxes are probably going to go up in a number of different areas. Again, I'm not an advisor on tax. I'm just listening to what the smarter guys than me are saying. We're in kind of a macro scenario here in the US where whether you're looking at short-term cap gains or things like that, where using tax qualified accounts is a really good idea for your clients. That's what our RIAs are telling us. So to be able to trade Bitcoin both in a tax qualified account as well as a custodial account or non-tax qualified account, both maximizes your ability to unlock assets under advisory as well as maximize the tax strategy for your clients. So we've seen a boom in account openings because I think a lot of people are starting to see that writing on the wall where the structurally the tax environment looks like it's going in a higher rate as well as yeah.
So what percentage of your accounts would you say are IRA accounts versus taxable?
I would say out of the RIAs that are opening up,
Mm-hmm.
it's probably 60% non-taxable, 40% or 60% qualified, meaning a retirement account, and 40% custodial,
Wow.
meaning. And then on the individual side, it's 90-10. 90% of people that are coming to us are opening retirement accounts.
Wow.
And 10% are opening custodial. And that's because on that side, you can go create a Coinbase account pretty quick. Right. Coinbase doesn't offer an IRA or anything like that yet. Vice versa, your Fidelity account, you can't, in your retirement account there, you can't buy Bitcoin in it. So we're seeing a big niche there. And same thing on the advisory side. We'll actually see advisors open up both a qualified and non-qualified account for the same client, because again, that opens up the available right. Assets under advisory.
So I find it fascinating that the majority of your accounts are IRA accounts, and yet I would believe that the majority of advisors don't even know you're allowed to do that.
Right. You're right. But that's what we're here to change, and we've got a long road there, but it's going the right direction, and it's an exciting time.
Well, I'm glad to have spent time with you. That's Ryan Radloff, the CEO of Choice by Kingdom Trust. Ryan, if someone wants to reach you and Choice, how do they do it?
Go to www.retirewithchoice.com. Also on Twitter, it's @ChoiceByKT. And you can follow me at Ryan Radloff on Twitter as well. Those three things I would say are the best way.
Ryan, thanks so much for being with us today. Great to be with you as always.
Likewise, Rick. Thank you.
I'm Rick Edelman of RIADAC, and if you would like to learn more about how you can get knowledgeable about this entire subject area of blockchain and digital assets and attain your certificate in blockchain and digital assets so you can demonstrate to your clients your level of knowledge and expertise, visit our website at riadac.com. Thanks for joining us.